Good afternoon. This is Brad Dennis with BIS Commodities with your crop roundup for the first week of December. Getting into it today, we're looking at corn finishing around the 95 level in March, up about a nickel to 6 cents on the week. Beans making a late charge. They were up about 27 cents on the day, which equates to about 12 or 20 cents, I think, on the week or so. We closed last week at 16 and finished in the 30s, upper 30s today. So seeing some higher prices in corn and beans this week, kind of going against the whole macro trade, but we'll get into that a little bit later. So in corn, March corn, or basis March, we were looking at a 275 to 295 range in corn. Today we did break out of that. We traded up to 296, but closed at 295, the top end of the range. Very light producer selling. You know, guys have the product in the bin or sitting at the elevator, and they're not willing to sell. They want to see $4 on it. The stuff that the elevator owns, well, that's all basis play, so they're waiting to see if there's any kind of firm basis up there. While the market's rallying, there's no need to firm up basis. So it's one of those things where really the seller for the month of December has to be the elevator, and we just have to see some basis improvement to see that happen. Kind of interesting that you're seeing this corn rally when you've got an estimated, I believe, 20 million extra bushels that they feel are going to be added onto the ending stocks next week once we see our supply and demand report out of the USDA. So the ending stocks are supposed to go up. You've got $1 that's hitting multiple year highs right now. And you've got a crude oil market that's still struggling and moving to the downside. And you're yet to see that corn market up there. You know, you look at the dollar, and the dollar is going to directly affect the export market, and that might be something that you see, you know, over time, slow down demand. And then as far as the crude's concerned, the discretionary blend. When you look at what's happened between ethanol and RBOB, you know, there's a discretionary blend that might be ousted right now. I believe it was this week that ethanol was off about 70 cents or so. So with lower demand for gasoline and the high price of ethanol right now, you're probably going to see stocks increase, production come down, like what we saw this week on the Wednesday report. Margins for ethanol plants are starting to shrink a little bit as well. And are these trends going to continue in, say, the dollar and in the crude oil market? Well, in the dollar, you saw your 2-year notes have its highest yield in quite some time. So they're already pricing in interest rate hikes. Most are thinking that it's going to be in June. Others are speculating a possible March hike. So those are going directly against the ECB, which is looking for different ways to incorporate QE or quantitative easing because of their situation over there. So the dollar should stay strong. And you know, you also have to keep an eye on both the Canadian dollar and the Aussie dollar. And with those commodity currencies coming off, the rally could be a short-lived rally in this corn market and just probing the upper edges of the range. As far as beans are concerned, had a 50-cent range this week, which for beans, typical. You know, we got beans down below $10. Somebody bought up a bunch. Now we rallied them back up. How far do we have to go to stop the demand on it? And do we have to? I mean, we've accounted for a lot of demand, and this week we're probably going to see our ending stocks move lower than the 450 that we've seen over the past 2 months, because we're going to say, hey, there's going to be more demand. But what's the difference really between 450 million extra stocks or 400 million extra stocks? You still have plenty of beans that have been that are in the world right now. We had our record crop. Things are looking decent down in South America still. They're going to have a crop out there. The bottom line is, like I said, we got below $10. Our beans were cheaper than, or cheap enough to make crush work over in China, and they're going to buy them up. There's a lot of boats that are going to start unloading in China, but that's a situation that we saw last year too. Indigestion because of so many beans coming over their way. Well, we saw that last year and we didn't back off all that much. So it comes a time where that demand, or they've gotten their fill. And once we start to see that taper off, once we start to see the inspections taper off more, once we start to see the export sales taper off a little bit more, then I think you start sinking back onto the downside. In the wheat market, wheat was very interesting this week. Started off strong, anticipating that Russia, with the lower ruble, would be holding back wheat. Price inflation was noted over, wheat or food inflation was noted over in Russia, and everybody thought that they'd be holding back bushels. Then when everybody looked into it a little bit harder, they found out, well, what realistically, or how many bushels are they going to be holding back, a minimal amount. And then this week you had them offer some SRW in the Egyptian wheat tender. They didn't sell any, but to have offered it out there tells you that they're not going to hold back their wheat. They're going to still move it out there. So that story is kind of played out. Looks like March wheat, 610, pretty good resistance level up there right now. Over in the cattle market, very interesting couple days in cattle. Cattle saw managed money be about 25% of its open interest. And if you look at commodities over the past year, cattle and feeders were probably about the only two that had real returns worth anything. So I think you're seeing a little bit of speculative money coming out of this thing. We are starting to see some cash trade at lower prices, hearing 166 today in the Midwest. So the cash markets are backing off a little bit too. Talking with people, it sounds like packers are bought out a ways too, out to that Christmas time frame. So we could be going into a period here where not a whole lot of negotiated cattle are trading. Positive basis for guys. They're selling cattle. They're buying it back a little bit cheaper on the board. So that's helping to move cattle through as well. And then you get down to the equities and the unemployment figures that we saw today. This kind of goes back to the dollar talk. Non-farm payrolls came in at 321. They were expecting 230, so we blew that one out of the water. And I think people had anticipated a little bit lower number because ADP on Wednesday was around 200, so they weren't expecting anything over 300. Granted, it's a seasonal number as well with the holidays and such, but positive number nonetheless. 5.8 on the unemployment rate. So you're seeing no reason to back off from the idea that we will be hiking interest rates down the road. So, we'll be ramping up interest rates. The ECB, European Central Bank, will be cutting rates, and each of these central banks have different paths out there. So, going forward, we're seeing prices drop down. We see demand perk up for beans. So when we start to see that demand just kind of taper off, then I think you have you're under $10 trade out there. Corn wise, really you're going to start pricing yourself out of the market here pretty soon. We were competitive on a world basis when we were down around that 360 level. At 390 we are not, and with the higher dollar, we are not. Plus, we've got to keep an eye on domestic usage, because if that crude oil market does get below 60 bucks, you're really going to be at bare minimum margins in those ethanol plants. So I think that the outsides will come into play down the road. They just haven't reared their ugly heads, I guess, quite yet. Very interesting that the ags, out of all the commodities, were the only ones up today as well, with that higher dollar. So that is kind of the that is the update for the first week of December. And if you have any questions about this, give us a call here at BIS Commodities, 1-800-373-2525, and end of broadcast.